So now we've learned how to enter transactions in the cash receipts journal. What we need to now do is post those totals to the ledger account. So we're taking the details out of the ledgers, putting it in the journals, but the point is we're now going to take these totals and put them in the ledgers. So in this case, we've got the total of the bank column. That's all the cash that the business received during the month. So we're now going to post that to the cash at bank ledger. So if we've received money, that's going to increase our cash at bank. So when an asset goes up, that's going to be a debit. We do the date as the last day of the period. The referencing we'll talk about at the end of this video, but for now we'll just worry about doing the date as the last day of the period, in this case the 31st of Jan. The next column was the debtors column. That's all the money I received from debtors this month. So is that going to be a debit or a credit to the debtors ledger? Well, it's going to make my debtors decrease. If they pay me back and give me money, that's going to make debtors go down, so that'll be a credit. Again, we always post to the general ledger on the last day of the period. Next, we have cost of sales column. So that's we've learned how to do that for individual transactions. It's going to be the same procedure this time. We've got an expense going up, which is a debit, but we also know that when we, and we'll post it on the last day of the period, but we also know that when we do that, it's going to decrease stock, which is an asset. So we have a matching debit and with a credit there. We've also got sales in this case of $670. Sales or revenues. Revenues go up on the credit side, so we post that on the last day of the period. We'll skip sundries for now and just go to the GST column. That's all the GST the business received. So that's going to increase our GST liability, so that'll be a credit. Again, posted on the last day of the period. Then we have the sundries column. So it's the only one where we don't post the total. We don't go and create a sundries ledger. That's actually incorrect. What we do is we post each transaction individually. So in this case, we're going to go and find on January the 6th, there was a capital contribution. So that's going to, sundries are irregular. Each transaction will get entered individually. So again, posted on the last day of the period. Also have interest on investments, that's a revenue, so that'll go up on the credit side. So not posting the total of sundries, just posting each number individually on the last day of the period. Looking at the referencing, so we had one giant debit went to cash at bank for 6260. That was posted to or matched up with all these credits to credit to debtors, credit to sales, credit to capital and interest, they were from the sundries column, and a credit to GST. So for our referencing, in the cash ledger, we couldn't possibly fit the reference debtors / sales / capital / interest / GST. So what we do is we just write cash receipts. However, we do need to write the actual name of the matching debit to all the credits. So in the debtors ledger, the sales, capital, interest and GST ledgers, we're going to need to write cash at bank or just cash as our reference. Looking at the cost of sales ledger, we know this from entering the transactions individually. There'll be a debit to cost of sales and a credit to stock. And the referencing, we just find the matching credit to the debit, which is in the stock ledger, and vice versa. We've got the debit appearing in cost of sales to match up with the credit.